Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hey everyone, looking at Twitter daily, weekly, and hourly time frames. So we're in a pretty big pullback, and there's no surprise we're pulling back significantly because we saw a very big run on a rumor essentially, and to be honest, it went a whole lot longer than I thought it would. Rumors are usually short-lived, so the fact that we did see this much action had me believing maybe that rumor, there is some truth to it, but that remains to be seen. I would certainly never make any trades or investments based off of rumors. So after that big move, keep in mind we went from 1575 up to 21 over 3 weeks without a whole lot of consolidation. There were a few levels of consolidation, but it's no surprise we're pulling back fairly significantly. After that, we've seen a whole bunch of red over the past 2 weeks. The bulls are defending this 200-day moving average support the past couple days. That's at 18.29. We closed 1 penny above it. It looked like the bulls were going to be making their stand at 18.20. We had the low of 18.20, 18.23, and the break on Friday, a lot of that attributed to the bearish market dump, and that certainly didn't help the bulls. But we did close above that 18.20 level, so we're still looking at that as a base of support that is being built, but we're going to have to see the bulls see a solid reversal day. We saw a bunch of bullish reversal candlesticks, but you can see upper wicks is the theme. Bulls are not comfortable holding overnight, as opposed to the bullish move to the upside. Look at the lack of upper wicks on a lot of these candlesticks, showing that strength. So the weekly time frame for Twitter, bearish reversal candlestick rejecting from the upper Bollinger Band in the 50-week, confirmed this week, but we're still holding this 10-week moving average support at $18. That's going to be around $18.10 or so at the open next week. That's going to be a key level to be maintaining this strong trend we have been in, and we've just been setting higher lows and higher highs over the past 3 months. And we'll see if the bulls can continue that. This week, a lot less volume, which is a good sign for the bulls. Bulls always want to see decreasing volume on consolidation. So key 10-week support, if that's lost, we are looking down to the middle Bollinger Band. So we'll see if the bulls defend that level. I think they will personally. Let's look at the hourly chart to get some indications of when this trend might change. So here's the 10-day hourly chart. We can see once this 20-period moving average became resistance, rejection, 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 rejection. It became support. It looked like we were going to turn things around here. We had it back tested and it held as support, an attempt for the bulls to start setting some higher highs, but then we lost that support on increasing bearish volume, a little bit of a fake out there, rejection, and now we're right at that 20 period here again. So we can see, let's zoom in. The bulls attempting to build this base at 18.20. We held it. Didn't see much upside, held it again, but then on Friday, with the bearish market action, we lost that level, but did regain it by the end of the day. What we're going to be looking for a trend change is a break of this lower high pattern. So that means we're looking for a break of 18.53, the high of Friday. This 100-period resistance is going to be in play early next week. That needs to become support as well. That's going to be lining up just above this 18.53 level, at least on Monday. And we'll see if the bulls can turn things around here. And again, we need solid closes to signify the psychology of the candlestick that the bulls are comfortable holding overnight. So we'll be keeping an eye on Twitter. And again, we're still bullish on Twitter. As long as the middle Bollinger Band on the weekly time frame is support, that's when we started covering Twitter as a resident bull on the chart guys. Once this middle Bollinger Band was support, we saw a very nice follow through, and as long as that is support, we are looking for this trend to potentially change. But if that's lost, the bears win, and we're looking back down at the all-time lows. So I appreciate you watching. We'll keep an eye on Twitter and check back in probably next weekend. Have a great rest of your weekend.